How long should I fix my mortgage for? You're trying to get the maximum amount of home loan interest savings and get some certainty with your mortgage. So you want to fix it, but how long should I fix it for? I'm going to give you 4 pro tips to help you figure out how long to fix your mortgage for and get the maximum amount of mortgage interest savings and outsmart the bank. Pro tip number 4 is going to save you hundreds of thousands of dollars. So pay close attention to that one. My name is Jackie Elias. I'm the CEO at FutureBound, where we help you get mortgage and financially free. We have mortgage advice, online courses, financial education, and coaching to help you build a strong financial foundation so you can build generational wealth and live the life that you want and deserve. If you like these tips and the guidance that you get from these videos, please do like, follow, and subscribe to us on social media. And let's get into today's topic. The 4 pro tips. Number 1, think about where interest rates are going. If wherever you are starting, if you think interest rates are going, then you want to fix your mortgage for as long as possible so you have a lower interest rate that is currently. If you think interest rates are going down, you want to fix your mortgage for the shortest amount possible so then you can naturally be done with this higher interest rate when interest rates are going down. The length of time is just based on the length of time of when you think the interest rates are changing. So currently we're in a higher interest rate environment, and it is projected that in the next 18 months, maybe 2 years, interest rates will be falling. In about the next year, they'll start stabilizing, and then they'll start falling maybe in 18 months, maybe in 2 years. These are all just predictions. You just have to make your best guess as possible, which is why I'm making this video to help you out. But you want to try to time where you think interest rates are going with how long your interest is going to be fixed for now. Pro tip number 2. Are you thinking about selling? You don't want to be caught with a fixed mortgage when you're trying to sell, because when you sell, obviously that loan is getting paid off and you will have break fees because you're breaking that fixed interest period, that term. If you're going to sell, if you think I'm going to be selling in 6 months, in a year, then obviously only fix it for that time. So then when you want to sell, your mortgage is floating as much as possible. Pro tip number 3, how much certainty do you want? You're going to be trying to fix your mortgage for the amount of time that you want certainty for. This comes into play when you're thinking about life events. Maybe you're having a baby and you want predictable spending plan and knowing how much you're going to pay. So you want to fix your mortgage for the time that you actually don't want a fluctuation in your mortgage. Now, obviously, if you might have a lower interest rate in that period of time where you want certainty, that's kind of where the mix comes in, as to weighing out the certainty that you'll get and also trying to time when you can lower your interest rates naturally with the end of your current fixed term. You can obviously combine some of these considerations to come up with the best length of time to fix your mortgage as possible based on your goals and what you think is happening with your finances. And then pro tip number 4, pay close attention to this one. Are you following your plan or the bank's plan? Are you just saying, hey, look, the bank has given me 30 years to pay this off, I'm just going to pay it off and try to fix and get the lowest interest rate possible? Or are you following an actual strategy to minimize the interest that you're paying on your mortgage? If you're following a plan, then that plan will include how long to fix your mortgage for, what kind of structure you should have, how much interest that you should be saving, hundreds of thousands of dollars that you can save based on having an actual plan versus just kind of willy-nilly winging it and trying to just chase the lowest interest rates and not really knowing where you're going or having a plan to build wealth or anything like that. In summary, the best way to attack this and to outsmart the bank is to have a plan. And that is what we do here at FutureBound. We give you a plan so you can be able to maximize the interest that you're saving, pay a mortgage for the shortest amount of time possible, and be able to use that position, the equity that you build, the financial situation and strength that you build to make more money by investing in the ways that work well for you. If you're saying, actually, yes, I need a plan. I want to fix my mortgage, but I actually really need a plan and I don't want to keep using the bank's plan of paying so much interest. I need more of a strategy to further my financial goals. Book a 15-minute chat with us so we can give you that plan. We can assess your situation, look at your financial goals, look at your priorities, priorities and give you a plan that matches those instead of the bank's priorities. We'll talk with you soon.
For more financial tips, advice, and education, subscribe to us on YouTube and don't forget to hit that notification bell.